everybody. May I welcome you all to our Nottinghamshire Pension Fund Committee and any members of the public that are watching online. My name is Eric Kerry, Councillor. I'm Chairman of the meeting. May I remind members that the meeting is being broadcast live. So please use, well, we've got a different microphone system here. We're speaking to that microphone. If you're speaking whilst somebody else is speaking, you may be heard online. So just be careful with any muttering and mumbling, please. Before we begin the meeting, I'd like to remind those members of the public that are present that there aren't any here. So I don't think there's any need to do the other stuff on that part of the introduction. So we're moving swiftly on to agenda item number 1, which is the minutes of the last meeting, which we held on the 13th of February. Seems like a long time ago, but it's only a month. Crazy. Is everybody happy with the minutes of that meeting? Please, all voting members, please show of hands. Thank you. Item number 2, I'll sign the minutes later. Item number 2 is apologies for absence. May I ask Mr. Mahandom to confirm apologies and substitutes, please?
Thank you, Chair. Councillor Andre Camilleri is substituting for Councillor Roger Jackson, who sent apologies under the category medical reasons. Councillor Lee Waters sends apologies under the category other reasons. And Councillor Francis Purdue-Horan sends apologies under the category medical reasons. Thank you.
Okay, thank you. Are there any other apologies from anybody in the room that knows about somebody? No? Okay, thank you. Moving on to declarations of interest by members and officers. So does any councillor or officer have any interest in any matter on the agenda that they need to disclose? No? Okay. Well, we're moving on quickly this morning. Item number 4 then is the Local Government Pension Scheme LGPS Annual Governance Conference. Before I hand over to Joe to introduce the report, I'd like to move the recommendation which is on page 16 of the agenda pack. And may I ask for a seconder, please?
I'll second it, Chairman.
Thank you, Councillor Saddington. So, Joe, would you please take us through the report?
I'll keep it brief because I hope that it's fairly self-explanatory. Just a few points that we've been through the conference that I just wanted to flag for members' attention. Not surprisingly, the big headline that kept popping up in session after session was the Fit for the Future agenda. And then some of the other priorities of government that are expected to be coming forward over the next 3 to 4 months-ish. So that would be things like new fair deal, improving data on opt-outs, survivor benefit reforms, and the gender pensions gap. In the discussion panel sessions, the thing that was particularly highlighted, and again this will be familiar to all of you, was talk about resourcing, recruitment, retention, and how, as a local government pension scheme collective, that would be supported and promoted. And finally, the kind of final discussion points were about balancing all the raft of stuff that will be coming forward, all the prospective changes that will need to be applied to the way we deliver the pension service, and how that can be managed and delivered in the context of the resources available. And I will end, if I may, with a plug and just say any members who haven't let me know their conference availability who aren't county councillors, please would you reply to me as soon as you can.
Thank you very much, Joe. That's a very clever little thing at the end there. We're using it as a reminder. It's a very comprehensive thought. Thank you for that. I just wonder, Councillor Garner, you were at the conference. Would you like to make any comments?
Yes, it was a very good conference. Only on a day, by the way, this time, so that's a very surprise. Especially the transport, I could have been car, but yeah, it was interesting. Yeah, we had a Wednesday afternoon back there and had a quick session till 5, talking about issues and things. But yeah, it was all right.
Okay. So likewise, you'd recommend for our members to attend?
Yeah, I recommend people going. I think Yeah, it's, the last time I went on this one about 3 years ago. So, different conferences, which it was, yeah. I went with it as well. Yeah.
Okay, thank you very much. Are there any other comments, questions, please? Okay, no indications. So the recommendation has been removed and seconded. All those in favour, please. Thank you. Okay, item number 5 is our independent advisors report. So before I hand over to Mr. Bourne, William, to introduce the report, I'd like to move the recommendation, which is on page 17 of the agenda pack. May I have a seconder, please?
I'll second it, Chairman.
Thank you, Sue. William.
Right, well, thank you very much, Chair. I'm going to make a few short points, but quite a lot has happened since we last spoke. First of all, Donald Trump, what he's doing is unequivocally bad, I'm afraid, because it goes right against trying to imposing tariffs will cut trade, and it goes right against the basics of economics. So it means lower growth. I think the second point I'd make is that what is happening, more spending on, it's moving to the state spending rather than the private sector. We're getting more on defence, we're getting more on health, just more government spending generally. And that again, the problem with that is you can get a once-off boost, but it does depend on raising tax. You have to finance it with tax, and in that respect, it's different from growth caused by private spending. So it's, again, it suggests that in the long term, growth is going to be lower. Third point, when I spoke last time, I spoke about Chancellor's budget. And I said that I thought her fiscal arithmetic was very tight indeed. And that particular chicken has come home to roost very quickly indeed. She's going to have to either raise taxes or cut spending. So again, that's not a good time for it. Now, I want to spend most of the time on my fourth point, which is about the high valuation of equities. I'm going to do something I very rarely do in committee. I'm going to try and show a couple of charts to you, and I'm sorry on the screen. I'll do my best to show it to you. What this shows is, on the one hand, on one axis, you've got the valuation of the market, so from cheap to expensive, and the green line is the current valuation. And the other is the future 1-year return from equities. And you can see from this, there's absolutely no relationship between today's price and the future return over 1 year. If I do exactly the same thing and look over 10 years future return, you can see that there's a very strong relationship. If the market is at a high rating like it is today, returns are going to be lower. And this chart suggests something like 0. Now, it's very easy for any smart manager, and that's not me, this actually comes from JP Morgan, to find data to fit their case. So I wouldn't necessarily take it as gospel that returns are going to be 0, but it does make the point that returns are going to be low over the next 10 years from equities. So I think the question that this fund has is, we have roughly 50% in equities. Is that right? And the answer actually, I think, is yes. Because we're an open fund, we're an active fund, we need growth. It's probably the biggest single risk we have to mitigate is not getting enough growth. But heads up, and this is really a big shift, a big kind of change in the market. So that over the next 10 years, you can't expect to get returns as high as we've had in the last 10, 20, 30, 40 years. And that really is my main message to you today. This is a turning point. I'll stop there.
Okay. Thank you very much, William. Yes, there's a lot of strange things going on in the markets right now, and your use of the word double whammy, I think, is very appropriate. You show some figures about economic growth in your papers. We have UK equities, particularly in some of our investments. So how's the UK doing compared to the rest of the world in terms of growth as part of that double whammy?
I mean, the UK, ultimately, its fate is going to bound up with the rest of the world unless we go in a very different direction. We have some positive points. We're very quite an open economy. English is the language of the world. We've got strong kind of services, services sector. On the other hand, I think we all know the country's not well managed. We have infrastructure issues, etc., etc. But I think from an economic perspective, I'd expect our growth levels to be very similar to Europe. From a stock market perspective, valuations here are a bit cheaper, so you might expect slightly higher returns from equities. But it's a might, not a definite.
Okay, so we've changed our asset allocation very recently, and we're implementing that in coming months.
We've actually already largely implemented, and Townsend talked to that more.
Okay.
It was a very minor change, a very gentle change. And the direction of travel over the last 5 years has been gently to reduce equities. And I'm very happy that we've been doing that, because I think we're roughly appropriate position at the moment.
Okay, I think that.
Townsend has been. What we agreed in February has already basically been done.
Okay.
We'll talk more about that.
Great, thank you. Any questions or comments, please, from members? Okay, I see none. I think the recommendation is to note, isn't it? Yes, the recommendation is to note, so we don't need to vote on that. So moving on to the work programme, which is agenda item number 6. The recommendation on page 22, I will move that. May I have a seconder, please?
I'll second it, Chairman.
Thank you very much. Tamsin, would you like to take us through the work programme, please?
Thank you, Chair. In the appendix, you can see the work programme for the rest of the committee's meetings in the current cycle. The committee is asked to identify any additional reports required. Thank you, Chair.
Thank you very much, Tamsin. I will at this stage say we're at the end of the 4-year cycle, so I think whoever's here after the election, I wish everybody well in their own areas for their elections members. Probably their job to decide what the thing going forward are. So that's all I'm going to comment. And any other comments from any other member, please?
Yeah,
Yeah,
I'd like to say it is the last one, isn't it, before the, and like I say, I was at the first one of this term with you, Eric, as your vice
I
chair.
think so.
I'd like to thank Eric for all his brilliant work. Yeah, I couldn't think of anybody, as I say this again, anybody to look after this committee better than you. And I'd like to thank you on behalf, I think, talk on behalf of everybody. You've done a fantastic job, and thank you very much.
Oh, that's very kind. That's yeah. And actually, I wouldn't be able to do that without the fantastic officers that we have
That's right.
at Nottinghamshire County Council. Now, not to thank them. I was going to do that at the end of the meeting, but you prompted me.
Oh, no, good.
Thank you. Okay, so if there's no further comments, the recommendation has been made and seconded. All those in favour, please, to accept the work programme. Thank you. Moving on now to the substantive investment reports. Item number 7 is fund valuation and performance. Before I hand over to Tamsin to introduce the report, again, I would like to move the recommendation on page 33 of our agenda pack. May I have a second?
I'll second that, Chairman.
Thank you very much, Sue. Tamsin, take us to the report, please.
Thank you, Chair. This report is to inform the Nottinghamshire Pension Fund Committee of the value of the pension fund at the end of the latest quarter and provide information on the performance of the fund. The table in paragraph 3 shows the valuation at the end of December, at the end of September, and the value a year ago. The fund investments have decreased by 90 million, which is 1.2% since the previous quarter, but have increased by 518 million, or 7.7%, since end of December last year. Within this valuation is 543 million of infrastructure investments. Infrastructure investments are now 7.5% of the fund, with 9.1% of the fund committed to infrastructure investments against an allocation of 9.3%. Paragraph 6 shows a more detailed analysis of valuations by portfolio. Paragraph 8 shows the first 6 months figures, first 9 months figures for 24-25 and unaudited figures for last year. They're probably audited figures for last year, my apologies. Paragraphs 9 to 20 relate to the fund's holdings in fossil fuel companies and investments in sustainable equities and renewable energy. There are a number of caveats that need to be understood in interpreting this disclosure, which are explained in the report, and I refer members to these. Over time, it is anticipated that fossil fuels will decrease as a proportion of the fund, and that investment in sustainable equity and renewable energy will continue to increase. This long-term trend will not be smooth. At the end of December, we had an estimated investment of 153 million in fossil fuel funds, which is 2.1% of the fund, and in sustainable and renewable energy investments amounting to just over £1 billion, or 14.6% of the fund. Members are reminded that a more thorough assessment of our exposure to fossil fuels through our equity investments is provided via LGPS Central's carbon risk analysis. The core index portfolio section reflects the equity market movements over the last quarter. 70 million was redeemed from the portfolio as part of the continued implementation of last year's asset allocation decisions. During the last 6 months, LGPS Central has been developing an oversight arrangement for the core index portfolio to bring this under full management. Responsibility for voting on the holdings within these funds will transfer to LGPS Central, so the common strategy will equally the holdings in the core index. This arrangement came into effect in January this year. The Schroders portfolio shows the regional analysis of holdings and purchases and sales during the period. Here too, there was a tranche of redemptions during the quarter as part of the rebalancing of the fund, reflecting asset growth and the decision to reduce the allocation to listed equities taken at the last review. The LGPS Central portfolio shows our investments made through the pool. Higher yields at the end of the year enabled further purchases of index-linked debts. 50 million was committed to the LGPS Central infrastructure funds during the quarter. Aberdeen have continued to manage our property portfolio. The specialist portfolio section shows the composition and valuation of the specialist portfolio and the transactions during the quarter. The section on responsible investment activity summarises some of the responsible investment activity which has taken place during the quarter on behalf of the fund. Thank you, Chair.
Thank you very much, Tamsin, for taking us through that detail. Interestingly, one of the final things you said in paragraph 31 was the performance of the specialist portfolio, which showed an increase in valuation over that last quarter, which is kind of different to much of the other spread of investments we have. Is there any particular reason for that, please? I think it was the Diversified Growth Fund that made up the most of that.
That's because we've invested some more money.
Right, okay, so it's not investment performance, it's an increase in allocation.
Yes, there was a net increased investment of 40 million.
Right, okay, fine. Thank you for clarifying that. Are there any other questions at this stage from members about the investment performance over the last 3 months and years? William, yes, please.
Just table 8, just for the benefit of the committee. I'd like to ask why it is that the investment expenses for the first 3 quarters were about 2 million, but last year's full year was about 25 million.
Yes, not a very sophisticated answer to that, I'm afraid. The pension fund accounts for its costs on a cash basis during the year and on an accruals basis at the end of the year. And as a lot of our costs, especially those that are recharged from the administering authority, are only recharged at the end of the year, that the costs during the year are not necessarily indicative.
Okay, well, but the underlying question is, do you expect anything unusual compared to previous in the way that in the numbers? Great answer, thank you. Okay, any other questions or comments, please? I see none. Okay, so the recommendation has been made. Just all those in favour, please. Thank you. That's unanimous. We now move on to item number 8. That's £5 for the chairman's £5 penalty for the chairman's charity this year, please. I'll move on to item number 8, which is exclusion of the public. We are now moved to that part of the agenda that proposes we meet in closed session to consider the exempt information agenda item number 16. I therefore invite the committee to resolve that the public be excluded for the remainder of the meeting on the grounds that the discussions are likely to involve the disclosure of exempt information as described in Schedule 12A of the Local Government Act 1972, and the public interest in maintaining the exemption outweighs the public interest in disclosing information. So I'll move that. Have a seconder, please.
I'll second that, Chairman.
Thank you, Sue. All those in favour, voting members? Okay, that's carried, unanimous. We'll wait for the streaming to end. Thank you.